May I begin? Let me extend a very warm welcome to all our friends from the media and the extended community that may have joined us from the social media platforms. I would like to extend a hearty welcome to you for this media review on the performance of the first half of fiscal FY 2021 over the last fiscal, and it's my esteemed pleasure to welcome President ACMA. Today's agenda would be that after this, I would of course invite President ACMA for his welcome remarks. Thereafter, I will walk you through the presentation, and thereafter we'll invite President ACMA for his expert comments. So once again, a hearty welcome to all of you, and President ACMA, you may please formally welcome all our friends from the media.
Thank you, Vinny. Good afternoon, everyone, and a special thanks for your valuable time and participation. I see a lot of friends from the media industry on the call, and I understand that this time we have now used a WebEx platform and also are live streaming on YouTube. So I believe there are many others who are on the social media platforms. I would like to sincerely thank all of you for your unstinted support towards the auto sector and ACMA fraternity. Last we had met, like in this forum, was on 18th of August, where we were talking, and 19th of August, where we were actually reviewing the financial year which had gone by, which was 1920. And today, of course, we are reviewing H1. There are many challenges still ongoing. We all know there are raw material availability issues, there are price escalation issues. Of course, we have just also completed a robust festive season demand. But these are, I personally feel, are good problems to have. We started this fiscal year with almost zero revenue and continued almost to the first quarter. And Vinny will soon be now presenting what the numbers show for H1, largely impacted by the Q1 lockdown, which we had. But definitely the outlook looks positive, and I seek your continued support for basically supporting the industry in these tough and unprecedented times. So thank you once again for your participation, and over to Vinny for the presentation.
Thanks, Mr. President. Sushil, can you please host the presentation? Yeah, so once again, hearty welcome. And as President said that we've been through a very tough phase. Q1 was especially very difficult. But of course, we are a very resilient industry, and we have come back quite strongly. And once again, my hearty thanks to all of you for standing by us and supporting us even in these difficult times. Sushil, can we do the next slide, please? Just to update you on the performance of the industry, on the left hand side the chart shows the annual performance, that is for reference purposes. And as you would have noticed, our turnover in the year 1920 came down from $57 billion to close to $40 billion in the last fiscal. And as you all know that the last fiscal was probably a tough fiscal, but the year 2021 with the outbreak of pandemic, as you all have covered very well, has indeed been very challenging. The first quarter was of course very difficult. Thereafter, as the economy unlocked, we have progressively increased production month on month, coming back on increased vehicle sales month on month. So what the chart reveals for the first half is that in the H1 2020, we clocked $26 billion. And in the first half of 2021, we clocked 15 or close to $16 billion. And this is a degrowth of around 34%. And as President said, that there is now with unlocking of the economy, and as the festive season went by, was a very encouraging one, and the indicators that the demand would hopefully sustain. So we are cautiously optimistic about going forward. So this is really the first slide. To the next slide, please. This is a chart on our supply to the OEM, the vehicle manufacturers, and this probably was the most severely impacted. The degrowth in our sales to the OEMs was more than 40%. It came down from 22 billion in H1 2020 to 11 or close to 12 billion in the year H1 2021. But interestingly, structurally, in terms of what we have been supplying or what has been the consumption from the vehicle segment, it remains same. It's just that the pies have shrunk. Next, please. The export performance in the last fiscal, we clocked $14.5 billion, and in the first half of this year, we clocked $5.2 billion. The export, again, a reflection over the globe, wherein the consumption came down. The degrowth in export was close to 24%, down from 7.4 billion US dollars. And again, in terms of structure, Europe continues to be over 30% of our market, North America, again, a third of our market, followed by Asia at, again, close to 30%. Next slide, please. This is more so in terms of the top countries that we have been exporting to. This by and large remains the same. USA as a country remains on the top, with accounting for 28% of our exports, and all these 8 countries together account for close to 60%. And if you look at the regions that we have been addressing our exports to, all in all, whether it was Europe, North America, and Asia, all of them came down by about 28 to 30%. So key markets also witnessed slump, as India witnessed during the downturn or the pandemic. Yeah. Next, please. This is a slide on import, and what is very interesting to note that the imports stood at 5 billion US dollars, whereas the export stood at 5.2 billion. So for the first time ever in the history of the auto component industry, we were net foreign exchange positive. Of course, it is too early to celebrate, but I think this is something really very, very heartening, because traditionally the auto component industry has been net import surplus. So coming as an export surplus is a good sign, and I hope that the PLI scheme announced by the government will encourage industry to export more, and this trend of export surplus will be sustained. And again, this is really on the import side, with Europe as a destination accounting for 30%. So Europe is our single largest trading partner, both in terms of export and import. We do the next slide. And here again, you look at the imports proportion from China continued at 27%. This was exactly the same proportion that was there in the last fiscal year. So Chinese import continued to dominate. But again, reflecting on the consumption in the overall industry, which witnessed a downturn, the imports have also come down. Next, please. The aftermarket, again, the aftermarket interestingly did not suffer as much as our sales to the OEM. If you recollect, I've just shown the chart where the sales to the OEM slumped by over 40%. The aftermarket came down by only 15%. So it is very noteworthy that, the aftermarket, in fact, came to the pre-COVID levels as soon as, if I recollect, from the month of June onwards. So April and May, everybody suffered, so did aftermarket because of huge challenges, not just on the logistic front, but also on the front of the working capital, and being smaller players in the aftermarket, and they were impacted very much because of the working capital issue. But I'm glad that they came back very, very strongly and very, very quickly, and they continue to grow month on month. The aftermarket performance came down from 5.3 billion in H1 2020 to 4.1 billion in H1 2021. The next slide, please. So this is just, we've given the charts again as a recap. The top chart is on INR, and the below chart in US dollar billions. This is just for your reference purposes. But in the charts that we have shown, the entire growth is in INR. Just for your reference, we wanted to leave you with both the charts. Next, please. Some of the issues that we have been grappling with, and we have been making recommendations to the government, though we are extremely thankful for the announcement of the PLI scheme, both for the auto component industry, also for the battery manufacturing. Key recommendations to the government is that, the details of the schemes be announced early so that industry can start acting on it. Essentially the first two recommendations that we have been talking to the government. In fact, just before this meeting, we had a meeting with the Revenue Secretary, and we also requested him for his support for announcement of these details. Of course, auto electronics is all set to grow in the industry, and we do not have a very sizable presence of auto electronics manufacturing in the country. So we have requested that this either be included in the specs scheme of the Ministry of IT, or PLI be announced for auto electronics manufacturing. And that apart, as you would know, that the FAME2 scheme announced 2 years ago is all about promoting consumption of electric mobility. Though it states that one of the objectives is to promote electronic manufacturing or manufacturing of xEV components, we are now requesting the government to action it and make sure that there is a fund allocated or a grant made available for a corpus available so that can be used for promoting manufacturing of xEV components. With recent announcements, mega announcements, if I may say, of OEMs wanting to establish India as a hub for EV manufacturing, this would be very, very critical. And of course, the aftermarket in India suffers from grey operations. So our request to the government is to implement or mandate standards for the aftermarket so that rampant import of components for the aftermarket can be checked. Also, from a perspective of exports, the MEIS scheme, which the government offers to the industry, wherein the industry gets 3 to 5% incentive, is all set to go away. This will be replaced by a RoDTEP scheme. So we have requested the government for an early implementation of this alternate scheme so that business can move on as usual. And of course, there have been certain procedural issues that we have been facing with the newly announced Karotar and these faceless customs evaluation. So we have requested government to ease the processes here so that the challenges for the industry, especially clearing imports, are sort of addressed. So this is largely in terms of our request, and we're going to leave the presentation with you. The rest of them are essentially procedural issues. You can read them through. Will you the next slide, please? President mentioned, you want to say something, Deepak?
Yeah. So let me come in. We were actually, H1, of course, this is just a post-mortem of the figures and factual data. But I think obviously every one of you on the call would be interested to see how the H2, how basically the demand outlook looks. Although we are not right now giving exact H2 numbers, however, we thought it would be prudent to actually do a survey within the ancillary community and actually get the sentiment what basically it is catching in. So Winnie will just quickly go through it. We had deployed third-party PwC to conduct this survey, and at least it shows a very positive outcome. This survey was done just last month, and hence we are just sharing this time
Yeah.
the findings with you. So Winnie, please
Yes,
go ahead.
thank you. Yeah, thank you, Deepak, for setting the context. As President said that, we conducted a survey with PwC. We were getting sort of feelers that with month and month growth coming in the vehicle industry and production ramp up with at the component level and it reaching almost pre-COVID levels, there was some degree of resurgence of confidence, and we thought it prudent to do a survey. So I'll share you just about a few slides on the survey. And as President said, that the mood of the industry is turning out to be extremely positive, and there is confidence. So 84% of the respondents. This survey was essentially with the top leaders in the auto component space, and we covered all segments, whether they were tier ones, tier twos, or small and medium enterprises. And essentially, this slide shows that there is the coming back of confidence in the industry, in the economy, and what probably concerns that the industry has going forward, so that there is a sustained demand and a sustained growth in the economy, being that it should not be derailed because of political situations or geopolitical situations. I'm not going to elaborate. You all cover these situations on a day-to-day basis. Of course, some of the sectors haven't recovered, like maybe if auto sector has recovered, but there are others, key sectors that had an important role in employment, or even, generally contributing to the GDP, haven't recovered as much. Of course, the threat looms large. What would happen if there is a resurgence of the pandemic? And of course, we need to, the question mark being whether this demand will be sustained and the economic growth that we are seeing or the recovery that we are seeing can be sustained. So these are some questions that loom in our mind. But if you look at it, there is a great degree of optimism in the industry in the next fiscal year, and of course in the growth of the industry. So we would definitely like to see the next fiscal year as a year of growth. Next slide, please. This is pretty much of what I mentioned earlier of the, the confidence in the industry coming back. So the yellow portion represents the respondents who feel that, the growth coming year would be more than 5% or in the range of 0 and 5% and beyond. So if you see 15% of the respondents felt that in the FY21, the growth will be in the range of 0 to 5% plus, whereas for the next fiscal, more than 84% of the respondents believe that the growth will be 0% to 5% and more. Similarly is the case in case of exports. Similarly is the case in case of the aftermarket. So overall, we are hopeful that the next fiscal year will be, a robust one. It will be a year of recovery for all of us, and hopefully good tidings will prevail. Next slide, please. This is also a very important slide because, a benchmark of growth and confidence is whether companies will invest or not. And what we found is that a very significant portion or a very significant number of respondents are now open to investments going forward. Of course, the caveat being that the growth should be sustained. So this is something really very, very positive that people would probably look at even CapEx expansion going forward. Yeah, so next, please. So this is all I had to share with you. And once again, a very big thank you to all of you for supporting us so well. And if I may now invite President ACMA for his expert comments on the way he sees, the market panning out. So Mr. Deepak Jain, please.
Thank you, Vinny. So primarily, as you have seen, that although in H1 the industry decline is 34%, but it's primarily due to the Q1 lockdown, which we actually had almost zero revenues. In Q2, we actually did see a recovery, but more importantly, as we are already in Q3, we have seen some strong numbers. Rather, October, at least for the ancillary industry, we actually saw one of the highest numbers because all these segments were prepared for the festive season, and there were basically a lot of pull from the customer. Going forward, the sentiment remains very positive. There are certain headwinds. For example, more particularly, there is still a concern on the raw material availability as well as the recent commodity price escalations, which may obviously have some hindrance on volume as well as availability of raw material. But all in all, it is probably in a much more better. We are very, very hopeful that all as unlock continues to prevail within India, there will be now more than just rural demand, but also urban demand. There is also a hope that going into 2021, 2022, there will be vaccination alternatives available within the country as well, which I think will also boost both the consumer side sentiment as well as the supply side sentiment. So hence, we feel that after, I would say, very two harsh years, which is 1920 as well as 2021, the would be a state of recovery coming in the next financial year. So I will just pause at that and we'll just open the forum for a more interactive session. Thank you. So Winnie, will you moderate? Is there any
Yes, sir.
question? Yeah, thank
Yes, indeed. Yes, indeed, I'll moderate. Vikram, can you kindly make me the moderator so that I can see if people are raising hands? Can I request, our friends from the media maybe to ask questions? That'd be nice. If you could raise your hand or just simply unmute yourself and ask a question.
And Vinny, maybe you want to open some chat because I'm seeing some chat conversations as well. I think Nandini has said.
Yes, yes, I'm
so
seeing that as well. Yeah. So, yeah, sure. So maybe we'll go in the order in which the questions have come in. So Nandini, can you ask a question? Yeah, you're there. Please unmute yourself and ask a question. Nandini, you may unmute yourself.
Hello, Mr. Jain. Hi, Vinny. Just a very quick question. You were talking about this for turning forex positive for the first time ever. What is the sentiment that you see going forward? Do you see this trend continuing, or will that be impacted? That is one question. And also, in terms of the drop from China, I noticed in the chart it said 36% drop in imports from China. Is this the highest, or in terms of the top importing countries?
Yeah, so Nandi, I can take that. If you see overall, I think the import deficit or the export surplus now is primarily a combination of both imports and exports, right? And although we are very happy that we have an H1 turned basically export surplus, I think it's primarily largely dependent also on the domestic industry contracting to the level of almost about 42%. And that's why the domestic imports have also contracted aligned with that, which is 33%. Also, I think while India had gone under lockdown, there were certain countries which were already producing automobiles, and that actually was a saving grace for our members who were exporting from India. And that's why you see that there's not so much of a steep decrease on the exports. And I think that's obviously set off a lot of imports, and hence we have actually come up as a positive. Going forward, of course, the industry does aspire to be having a sustainable export surplus industry. And I think there is a lot of effort and impetus and discussion between all the stakeholders, be it the OEMs, be it the ancillaries, and also the government, to further enhance the localization and also probably give PLIs and obviously kind of make more export competitiveness. So I personally feel that going forward within a few years, it will be a export surplus industry on a sustainable basis.
Thank you.
Thank you, Deepak. Thank you, Deepak. Indeed, we
Second
would
part
endeavor
is,
to be. Nandini, please
Vinny,
go
the
ahead.
second part of the question about decrease in imports from China, I noticed that it
Yes.
was about 36%, if I
Yes.
got that right. Is that the highest in
No,
recent years?
among the top. Oh, I do not. I have to check that. But among the countries, top countries that we've been importing from this time around, Korea recorded sort of quite a bit, is like 46% degrowth, and Thailand recorded 48% degrowth. I will check on the drop, particularly year on a year basis from China. But this has been sort of in tune with the overall shrinkage in the revenue in the industry. So Korea did a very significant drop because but again, Chinese drop from China 36%. It is one of the largest. It is like 27%. So in quantum, it would be quite a significant drop.
Can you
You're
share
right.
the quantum with me?
I will just send it out to you. We just need to, the charts are here. We will just do the mathematics and send it to you. Okay.
Okay.
Yeah. Thank you, Nandini. Thank you, Deepak. Can I now invite Maleban? Malay, can you ask your question, please? Kindly unmute yourself.
Yeah. Hi, Deepak sir. Hi, Vinny sir.
Hi.
Yeah. So my question is first, I have two questions. First is regarding RCEP. So we know that India is not a part of it, and almost, if I'm not mistaken, almost a third of your exports are in Asia, right? So how will it impact going forward since India is not a part of the trade agreement?
Well, Maliban, I think, just apart from RCEP, there are basically wherever India is actually trading, there are FTAs which are already been there, for example, in Thailand. However, as far as we are concerned, we have always said that we need basically a ground level playing field where, I mean, say, where India is actually opening up its markets, we should also have a similar market on competitive terms where we can actually also do business. And we have seen that in some markets, those are not basically the same thing. Particularly to RCEP strategy, maybe I can request also Winnie to comment on it.
Yeah, I just asked that again. I lost it a little bit.
Now, I just wanted to know, sir, since almost a third of your exports goes to the Asian markets, so now that
Yeah.
India is not a part of RCEP, is there a chance of exports adversely getting impacted because India not being a part of the trade agreement?
I don't think so. I do not see any such issue at this juncture. I mean, we were doing this even before the RCEP, so we have not heard any such thing from our members on adverse feedback on the trade from our members. No.
Okay. And Deepak sir, the second question is pertaining to demand. What we have seen is Mr. Rajiv Bajaj, Mr. R.C. Bhargava, they've said that after December we could witness some softening of demand. Because the economic growth hasn't recovered as much as it was expected to. So, what's your expectation?
So I think we've just come across a festive season where I also do believe that the inventories in certain segments are also quite low. And for us, also it depends on what the production coming in. We were already expecting some softening of the production levels in December, and this is largely traditionally so because December being the calendar year end, and also there are a lot of planned shutdowns which basically is there. Of course, October, as I said, was full blast. But going forward, we feel that the demand is although softened, but it's sustainable. We don't expect the festive demand to be same as what it is going forward in Q4. And also, if it's the similar trend, what we're very happy at is that there are no disruptions, specifically because of COVID, the unlock. There could be certain headwinds, which I mentioned in my opening comments, like what we have seen on raw material availability, specifically on some semiconductor issues. And I think the industry is working hand in hand to see how we can basically take precedence of that.
Right. Thank you. Thank you, Deepak. Thank you, Malay. Can I invite Alisha now? Alisha Sachdev. Are you there? Can you unmute yourself?
Yes, sir. Hi, good afternoon to you.
Yes, good afternoon.
So essentially, sir, I just wanted to build on, what you were mentioning about the concerns regarding raw material availability and higher commodity prices. If you could just elaborate what the status is currently. We were hearing there are problems even in, shortage of containers, etc. And automakers are also flagging that as an additional concern. So taken together,
Yes.
what do you anticipate the demand will be on production in the next quarter?
So I think there is, as I said, it's very difficult to say because the OEMs have not given us an indication that how much there will be a demand impact on Q4, let's say, or Q3 already done with Q4. But I think definitely for us, the concern is the enhancement in escalations in the costs which are coming in. And these are quite steep. Be it in, I would say, metals, be it in polymers, we see across chain. Also, the semiconductor issue, because during the lockdown and global lockdown, where auto basically was under lockdown, the lockdown has also given a lot of rise in consumer electronics. And we have seen now that a lot of the basically capacities have probably sold out to these consumer electronics of the auto capacities globally. Although for auto electronics, if I look at it in global terms, still the demand is minuscule as compared to other consumer electronics. So I think we need to actually figure out what the impact would be. And of course, we know that there is a lot of intricate dependency on the supply chains. There are 2 or 3 suppliers who are not able to perform. The whole supply chain does get impacted. But as I said, it's too early to give out numbers in terms of impact. We do feel that in the market demand is still there. It is still robust and sustainable. But there are headwinds which continue in Q4, and we'll, I would say, kind of grapple with it as and when it comes.
Yeah. So, Deepak, there's a related question from Parikshit, though in some ways you've already answered that. But, since he's asked this, I'm sort of just airing this question. And he says, on the impact of the commodity prices on auto sector margins and the vehicle prices. So, Parikshit, we cannot absolutely comment on the vehicle prices. It's for the vehicle manufacturers to decide. And on the sector margins, Deepak, would you want to comment, or you actually already answered it?
No, I can only just say this that
On mute, please. Bhutam, can you be on mute, please?
Okay, so let me just comment on the prices. The price escalation or the downward trends is actually a global trend, right? And this is not the first time we are seeing the commodity prices getting firmed up. Actually, over the last 2.5 years, it was actually softened and it was going down. And the industry does have a good mechanism to actually, at least OEMs in the supply chains through contracts, actually average out the raw material prices going forward. So I think I just want to put that. Of course, as Vinny has said, how much it's going to impact onto the vehicle pricing, that we would not be able to comment on.
Yeah, thank you. Bhutam, you have a question. Would you want to put it to the president? Bhutam? I think Well, he wanted to ask the impact of the semiconductor shortage in the country on the automotive industry. We've already issued a statement from President ACMA, but Deepak, would you like to say something on it?
I mentioned again, I think the semiconductor supply issue is a global issue. And of course, Amish, I think the certain members of ACMA who actually are facing a global acute shortage, they are very strongly working with the OEMs to see how they can cover it. There may be some impact in Q4, but as of now, we have not been able to estimate the industry impact. We have seen certain segments of it getting impacted, and we are in discussions with OEMs to see how would they basically look forward.
Yeah, thank you, Deepak. We have a question from Rajkumar from PTI, and he would like to ask how much of the cautious optimism is hinged on demand sustainability? Is there a fear of the so-called pent-up demand festering out?
So obviously, as we saw October, and I'll give a reason. October sale was probably one of the highest sales what we actually saw. And this obviously had to do also with the pent-up demand which came in. And going forward, obviously, we see not the same as the festive demand. It will soften out. But I think there will be a urban as well as rural demand playing in. We feel that in certain segments is sustainable. Rather, the indicators what we are getting from our customers are also now probably pushing us to revisit our investment plans, because in some sectors their capacities maybe have to be further enhanced, which probably would be within a year and a half. So I think it's good news as of now. We would say basically optimism, but with caution, because the lesson we have learned in the last 9 months is that we have to be very cautious of any basically forward-looking statement because of such dynamic changes in current situation. So we are cautiously optimistic on this.
Thank you. Our next question is from Sumant Banerjee. Sumant, you may unmute yourself.
Hi, Vinny. Good afternoon, Mr. Jain. So I have a question on if you can give me a perspective of H1 numbers. I understand in H1 2020, 21 as well. 2019-20, there was a decline in H1 of that year as well by 10%, if I'm not wrong. So we were already on a low base. And from that low base, of course, for obvious reasons, we have again declined by 34%. So give me a sense of how historically low we are. And if we have to go back to those peak levels of 2018-19, give us a perspective of how much time can it take. I know it's a hypothetical question, but it needs to be asked so that we get a perspective of how low we have come from the peaks of 2018-19. How much time could it possibly take, 2 years, 3 years, whatever time, for us to go back to that level? That is one. And my second question, short one, is on the government interventions. We have not seen a sector-specific stimulus package for automobile industry yet. There are a lot of things for MSMEs which also have a rub-off effect, but no GST cuts. Even the scrappage policy hasn't come in, and we were expecting that to happen sometime in September or October. So give us a sense of what is there a frustration building in that the government is really not doing anything for the industry? If you would like to comment on that. Thank you.
So I'll answer the simple, let's say, question first, which is primarily on the figures of H1. I'm not just talking H1, and you're absolutely right that after a good growth in 18-19, what we started seeing was demand softening. Rather, it started with H1 and then actually further went down in H2. Rather, if I were to look at last financial year, the H2 basically contracted more than H1, right? And that basically obviously means that you're a low base. If I look at an overall year, at least the ancillary industry did about 12% reduction. If I understand, the vehicle industry had actually contracted somewhere close to 17 to 18%. And going forward, obviously, this year as well, because of the lockdowns and the challenges we continue to face, we will have a double-digit contraction. Because, as you know, 34% we've already contracted as an industry in H1. Although we are optimistic about the H2 performance, but we obviously will not be able to completely recover from the Q1 and Q2 fiasco. So hence we will have a double digit. So that gives us a ballpark figure of almost, I would say, a one-fourth kind of an industry decline. So in 2 years, so 12%, you give it, let's say 15% even. So you're talking about almost a 25% hit on the auto industry. And now your key question becomes, when and how do we see this kind of recovery going back to the peak levels of 1819? I think the question here would be more pertinent to say that how strong is we seeing the recovery? How sustainable is the recovery? We have been growing at an average of about CAGR of about 9%, 8%. And if I just do that math, then it means that it will take you almost about 3 to 4 years to actually come back to the same 1819 levels. We are very hopeful that it comes before the 3 to 4 year time frame. And there are, I would say, certain interventions which we are always wanting from the government. We are not talking right now, and we have stopped talking actually about the GST scrappage policy, because wherever we have dialogue with the government, I think it is in their agenda. We understand that there is a massive revenue deficit also with the government, and auto sector, by the way they have actually put in the allocation on the sector through the PLI scheme, the sector has got the largest allocation. Also, I understand that recently there is a parliamentary standing committee report which has come out, which has also suggested to DHI to refocus on the sector. Even I believe they've also talked about certain GST interventions there. So definitely the government is basically aware of the importance of the sector and also the potential of the sector going forward. We are not frustrated. I think we have worked very closely with all our OEMs and shown true resilience in these very tough times. I've said, and we firmly believe that this is not going to be the last slowdown, and this was not the first slowdown which we have witnessed. But the way we have come out of it and we are trying to tackle this V-shaped recovery, I think that's commendable. So I think for us, most important is that we keep our focus and are agile and very responsive towards these, I would say, more risks which are coming in. Farmer agitations, it was COVID, but then farmer agitation, there is this issue of raw material availability. So there are new risks which keep on coming in, and we are actually getting more agile to actually address these issues. I hope so I'll be able to answer your question.
Yes,
Yeah.
you have very diplomatically, but yes.
I think you've been very comprehensive. Definitely, there are challenges with us. But I must also mention that, Sumant, that government supported us very well. When I speak from an ACMA or a component industries point of view, or a small and medium enterprises that we represent, the supply side interventions from the government were really very, very benign and helpful for us. And I'm very happy to mention that none of the ACMA membership that I know of has gone out of business. So that is very, very important from our perspective. So full marks to the government on that. Also on the industry performance, I just did a back of the envelope calculation, and we've been pushed back by around 4 years in terms of turnover. But God willing, if the coming months are very, very good, then we will be in a better shape. So yeah, thank you. Yes, I am noting all the questions, and please be assured that I will not miss out on anybody. Our next question is from Bala Chandra Gangadharan from BL. Bala, if you're there, do unmute yourself and ask a question.
Am I audible?
Yes, you are.
Yeah. Am I audible?
Yes, indeed you are.
Yeah. My question is, the drop in imports, does it in other way indicate the continuing challenges on the supply chain side for the industry?
Sorry, are you saying that the drop in imports would actually mean a supply chain disruption? Is that your question?
Yes, exactly.
Yeah, so I think if you see the H1 numbers, I think the drop in imports has primarily been because of the drop in domestic demand. You have to also understand that the demand of the OEM has contracted a lot more than the aftermarket. And that's why you see that it's probably not exactly same as this. So I won't read too much into it. However, obviously, we have learned the lesson in COVID that we need to not be over dependent on any one region. It could be Asia, it could be Europe, it could be US. And I think that's where I think the supply chains are working on de-risking themselves and seeing whatever other sources are available.
Oh, another question on the raw material price front. I heard from many sources that the companies say that recovery is quicker than what actually the industry expected. So that is the reason the raw material makers were not prepared. They were actually projecting a slow recovery, but the demand recovery was quicker than what was estimated by many industries. So that has created shortage, and this may sort of be come back to normal after a couple of few months later, maybe in the first quarter of next year or close to the second quarter or the second quarter of calendar year next year. This is the view I get. Is quicker recovery also an interesting issue in this?
So you're absolutely right, Bala, and it's not just an Indian domestic recovery, it's a global recovery. I mean, so if you see, China is probably one of the biggest consumers of the automotive market and the biggest producers as well. So I think that has recovered probably the fastest. You see other global recoveries, and hence, always when you see such a steep recovery, there always is pressure on the demand side, and demand being more, the commodity prices do firm up. This is not, as I said before, also a trend which is just today we have as an industry been quite able to absorb, the price increases as well as then whenever the price reductions come. But you're right, I mean, so we do expect these prices to become more stable in the months going forward.
Thank you.
Thank you.
Thank you, Bala. Thank you, Deepak. Next question, we have a hand raised. Ritu Pandanath, can you kindly unmute yourself and ask the question?
Sir, good afternoon. You mentioned that there will be a semiconductor issue which you think will be
Ritu
impacting.
Pandana, can you be a bit louder? You're not audible.
Hi, sir. Good afternoon. I was asking,
Yeah.
you mentioned the semiconductor issue you said is likely to impact Q4. You're in talks with. I wanted to ask, like, are you also discussing also strategy this particular process for a lot of
Ritu Pandana, I am unable to hear you. Could you kindly just type it out and I will read the question on the chat box? I could only hear you talking about the semiconductor issue. Could you kindly type it out on the chat box or just send me a text message? I will read it out for you.
Sure. Okay.
Yeah. Ketan, you had your hand raised. Ketan, are you there? Ketan Thakur?
Yes, sir. So I had a question on the capacity utilization in the industry right now. Given the fact that not all segments have done well, and there has been quick recovery in other segments. So, are you facing capacity constraint in some places and glut of capacity on the other? And when do you expect the investment cycle to return?
So you're right, Ketan. I think you answered your question. Depending on the sectors, and as you know, the ACMA fraternity has basically various sizes of component manufacturers tiered out in a various positions, as well as I think pertaining to various sectors. So I think depending on which sector you are probably more catering in. You probably would have, and you're sitting probably at ideal capacity, which would be around 50% or so. And you probably would, depending on certain sectors, maybe inching towards 80%, 85%. The key point here is that although on an annual basis, your probably installed capacity is much more, but even on monthly production runs or a daily production run, until let's say October, we went almost full capacities on, but then it softened in November and December. So we see that now at least the investment cycle thought, and that's what actually even the survey showed, that a lot of the members are looking at probably recalculating and calibrating their investment cycle going forward in the next financial year.
Right.
So
Thank
given
you. Yeah, go ahead.
if I'm allowed a follow-up,
Yes, please go ahead. Please go ahead. This is for you.
given the fact that there is glut in some places and the PLI scheme coming in around the same time, do you expect component makers to capitalize on PLI scheme given the fact that there's glut in capacity at various places? And do you have an understanding with regards to capex cycle? Are you seeing capex coming in? How much capex is going to be lower this year, and when do you see capex really coming back? Given the fact that market is going to be pulled back by several years, and it is going to take another 3 years to recover. So essentially, we have glut of capacity. So when do you see the capex cycle recovering, and capitalizing on PLI scheme in times like these?
So I think the thought of PLI is to make the industry more competitive and then probably also have more of localization as well as export potential. I think that's the intent. I think we need to look at first, once the PLI details come out, what and how we could do. But I think at least the industry is extremely excited that how we can use the PLIs to our advantage, especially given this whole contraction in our domestic industry. Second, in terms of the capacities, I think our ACMA's view is that we probably would need maybe a next year capacity planning. If you remember, we have done a peak of about 57 billion, US dollars, and that was done in the year 18-19, and we're nowhere close to that. So I think there would be incremental capacities, which some component makers will probably be going out to do, and that would be based on what sectors they actually supply to. But the whole sector doing a whole capex planning and growth, it will only come once we actually start growing to those escalated levels. And that probably can take, again, anywhere between 2 to 3 years, depending on how steep the recovery is.
Yeah. Thank you. Ketan, does
Thank you,
that hold? Yeah. Thank you, Deepak. Ritu Pandanath, I'm just sort of reading your question out from the chat box, and she says, are you discussing a sustenance strategy with OEMs in case semiconductor and supply chain issues persist beyond Q4? And would you put across these suggestions to the government for resolution?
I think the government is already aware, and I think electronics localization has always been a key challenge. I think COVID threadbare laid that, and going forward, as more and more electronics would come into vehicles, so there would be a more further need to localize, because that's where the threat comes in, that if we actually get more and more electronics and the industry is not ready, then obviously we would be importing a lot more, and that will not make us very self-reliant. So I think we are in discussions. As Vinny had also mentioned in his opening remarks, we are talking about how we can actually get into specs the auto electronics, as well as to see particularly how PLI can support auto electronics. And maybe I think the government is also thinking of how a fab facility, which is semiconductor manufacturing, can be done up within India or within control of India. So I think these are certain things. These are long drawn investments and strategies, but we are very much in dialogue with the government and all stakeholders, including OEMs.
Thank you. Thank you, Deepak. Stuti Mishra, ET. Nah. Stuti, you there? Yeah. You're audible.
My question is regarding the drop from China export, which is import, which is by 36%. So in terms of valuation, if we can say that what is the total amount that has been dropped in terms of valuation?
Yeah, I'll give you that number. I will just text that number to you. Not an issue at all.
Okay. So also just one more question, sir. Like from South, we're hearing that many of the motor companies and pump manufacturers are facing problems due to hike in steel prices and raw material and other metals. So do we have any other hubs or any other areas where we are facing similar kind of problems because of the hike in raw material? prices?
The hike in the price escalations is across, it's in basically metals as also in non-metals. So, you would actually see, and as I said, that it's primarily because of this very fast recovery globally and the demand shooting up. So I think that's basically the concern point. And I think the OEMs are also quite actively engaged with the raw material manufacturers, be it steel makers and all, to actually discuss to how to support the industry and ensure that although the price may be escalated, but at least the supply side, they're able to supply as per.
Thank you. Thank you.
And Shruti, just to add to what President said, if I understood the question, I think you said that South is impacted. It's not just South. Raw material prices cut across everywhere. So across the industry, we are finding this as an issue.
Oh, thank you, sir.
So great. I do not have any more questions to put to you, Mr. President. I would, and just sort of, does anybody have one last question? We're actually sort of bang on time at 1:30. So would you like to ask one more question? Else I invite the President. Yes,
Vinny,
please
I
go
have
ahead.
a question.
Nabil, go ahead. Okay.
We talked about drop in import from China, but does it show any kind of sentiment towards China? Because I see drop in import from other leading import countries also.
Nabil, I'll answer that. I think, as I said, let's not look into too much into why it's been dropped and this thing. China is the largest, if I look at for the component industry, the trading partner, because we are importing. And of course, Europe becomes the largest trading partner because we also export. But we are definitely import dependent on China to the extent of about 27%. The drop has been largely attributed because there has been a large drop in the domestic demand consumption. So if you see, we have actually declined almost 43% on the domestic, although the drop on the imports have only been about 36%, and it's in line with what the China drop has been. I think also, if you look at the sentiment per se, I think, as an industry, as a business partner, we don't look into too much of the geopolitical issues. We respect that. However, I think we need to understand that for us, the biggest priority is that there should not be any supply chain disruptions, and we are able to meet our OEM demands and or let's say customer demands, be it OEM, aftermarket, or exports, in these very, very troubled times. We are very, very fortunate to have, although headwinds, but as I said, these are good problems to have because, we went through a massive Q1 zero revenue, and those were very, very different and difficult problems. So we are very happy that and fortunate that we have witnessed a V-shaped recovery. It is much better than other sectors across India, and we are hoping that it becomes more sustainable going forward.
Thank you.
Thank you, Nabil. So since I do not have any more questions,
Vinny, let me just thank the media.
Yes, I'm about to call you formally for a thanks. Yeah, I was just sort of, there was a bit of a noise. I thought somebody wanted to say something, but there's nobody wanting to say anything anymore. So may I request you to formally thank all our friends from the media?
So a very heartfelt thanks. Really, personally, I'm indebted to all of you. I think you've been really very, very kind to the industry. Not just by supporting us, but also putting a positive sentiment and raising issues at various levels and across levels. I know we have been also one-on-one discussing a lot of things. I hope and continue that we will have a good, positive, and a continuous engagement with all our media partners. And I would like to also thank ACMA. Vinny, thank you for coordinating a very well-timed and much better organized WebEx meetings this time without any. So thank you, and also our PR agency. So thank you for basically coming in. I hope that we are into the system at your disposal if there are any things. I wish you also and your friends and family a very safe and healthy new year coming into it. I hope that this 2020 although will be a very memorable year. But we are all, I think, waiting for this 2020 to get out, and hopefully 2021 will bring some good cheer to all of us. So thank you once again for joining ACMA's press conference. Thank you.
Thank you, Mr. President, and thank you to all of you. Should you have any questions, you can always connect with us. So once again, a big thank you. Take care. God bless. Stay safe. Thank you. I'm ending the session.